Hey everyone, we are back with part 2 of the Elliott wave theory, analyzing nas100, and we talked about it in part 1 that we are heading at some of closer to these prices, and then today this is where the market is at. So we're going to be updating our waves as we're going to be usually doing that mostly, and then we're gonna be familiarizing ourselves with the waves and how the structure actually pans out. So um the previous video we talked about trying to find a support where we actually going to terminate this little bearish trend, and then we continue with our actual bias, which is the bullish bias. And then today we are somewhere over here, as you can see, and actually this is going to be sweet and short because just it's about finding the termination point of wave 4 where you will actually be buying, and then you hope to ride those trends. So firstly, to find the termination, we use the Fibonacci retracement tool, and then we're going to be starting from where 2 terminated, because it started over here at the top of 1, you are making 2, and then you go to straight to making 3, right? So we are looking for 2 prices over here, which is this price coinciding with 23%, and this price over here coinciding with 33%, 38.3, 38.2% actually. And then in the previous video we were over here at 23% because I think the price was somewhere over here, and then it was like buying a little over here, all these actions, and then we're like, wait, can we buy over here? And then we were checking all the possibilities that can make us go wrong and all that, but you always going to be we're always going to be giving room for the market to fall over here, because we know 23% is just the first percentage actually that is acceptable according to the Fibonacci, to the Elliott wave theory, the first acceptable percentage. And then down over here we are also, when you are here, you are still having room to fall over here, so you would always be counting in the 38.2% when you try to place your trades over here. So, and then you also put your buy limits over here, so when the price continuously falls, the last support, which is 38.3, 38.2 is over here at this price. So I mean, your stop's going to be maybe below this price. It's going to be below this price over here, maybe maybe just around 50%, or maybe above somewhere over here. But the last price, the last support according to the Elliott wave theory is 38.2, and then you buy the market, and then you continuously go higher and higher, and then you target 5, and then this is how we target 5. Wait, my surface is just not good for this muscles, just cannot freely move, just stop somewhere. And wait, we're not using the Fibonacci retracement now. We're going to be using a Fib extension, the Fib extension tool. So you put it over here, and then at the top of 30 of 3, and then you go back to where the trend terminated, and then you target 61.8, which is 61.8 over here. So it is likely for this price to hold and then make the market bearish again, and then continuously go down, because once you finish those waves, this full cycle, what to expect is an ABC type of a pattern in the opposite direction before you continuously go with this extra trend, which is the bullish trend. So this ABC is just correcting this wave 1, which is made of mono waves, which are these 1, 2, 3, 4, 5, because once they finish over here, they become mono waves. They become wave 1, which is made of these mono waves, and then you need ABC in the opposite direction, making wave 2, and then from there you are making wave 3, just like over here. You're just so this means this one over here, this one is made of 1, 2, 3, 4, 5, and then an ABC in the opposite direction, and then you continue with your 3, 2, 4, 5, finishing the cycle. So when we come closer to these prices, we are expecting the price to be bearish, but we are not actually going to, like, we are telling the price, okay, over here just go bearish, because this will mean you're going to sell over here. But you're going to be surprised sometimes that the market just shoots straight up, ignoring all this price. Because if we are bullish and then we are just bullish, and then it may just go even higher, which is sometimes there's other rules, which is the extension of wave 5. So be careful when you need to sell over here, but usually we just do not sell. You wait for a structure to be visible, an ABC structure in the opposite direction, so that you can target all those prices, so you can buy down here at a discounted price, and then you can even go much higher and higher and higher, riding wave 3, which is the longest wave, according to the theory, the rules and all that. So if you haven't watched part 1, you still need to go and watch part 1, so you can understand how we came up with all these waves over here up to this price, because we are just being correct according to our analysis and our forecast. So right now what we need to do is we just need to watch it, how it reacts to this price here, because our job was just over here to read this ABC correction in the opposite direction over here, ABC, and then we are supposed to buy over here. And then if you bought, you are great, you did great, and then we're going to be buying down here if we want to buy the market again. So we'll take our profit somewhere over here at 5. So I think this is it for today. We're going to see each other in the next video. Please subscribe and hit the like button if this video was helpful. Thank you.